What's shaking in the crypto world? Bitcoin Bulletin is live with the hottest takes and breaking news that you need to know. First up, Bitcoin price is battling to break past $113,000. Will the bulls finally conquer this massive resistance level, or are we looking at a potential pullback? We've got the deep dive into the charts and what it means for your portfolio. Then, get ready for some serious drama because a leader in the Bitcoin Ordinals movement, Leonidas, is warning of a full-scale fork. He's threatening to bankroll an alternative Bitcoin core if they censor ordinals and runes. This is a battle for the soul of Bitcoin, censorship, resistance versus network policy. You won't want to miss this. And is the Bitcoin price stagnation all thanks to paper Bitcoin? We're digging into the on-chain data, institutional accumulation versus long-term holders cashing out, and the explosive growth in derivatives. Could this be the hidden force keeping BTC from reaching new highs? Finally, buckle up as PEPE, the meme coin sensation, is absolutely rallying, outpacing even Bitcoin this week. We're breaking down the explosive 10% surge, the technicals, and what this means for the broader memecoin market. Don't go anywhere, hit that like button, subscribe for more, and ring that notification bell so you never miss an update. Bitcoin price stuck in neutral. Will $113K be the breaking point? Bitcoin's price is currently locked in a tense battle, hovering just below the critical $112,500 mark. After a brief recovery from the $110,000 zone, pushing past key resistance levels at $110,800 and $111,200, the bulls are facing fierce resistance. The price even climbed above the 50% Fibonacci retracement level, but the bears are holding strong near $112,600, preventing further upward momentum. The 76.4% Fibonacci retracement level is acting as a significant hurdle. Currently trading above $111,000 and the 100-hour simple moving average, Bitcoin has a bullish trend line forming with support at $110,800. However, immediate upside resistance is seen at $111,750, followed by key levels at $112,000 and $112,550. A decisive break above $112,550 could propel Bitcoin towards $113,000 and potentially even $114,200, with $115,000 as a major target. Conversely, failure to overcome the $112,550 resistance could trigger a decline, with immediate support at $110,800 and the trend line. Further down, major support lies at $110,500 and the $110,000 zone, with a sharp drop possible if $108,800 fails. The hourly MACD is losing steam in the bullish zone, and the RSI is below 50, indicating a cautious market sentiment. The community is buzzing with debate, with many watching closely to see if this consolidation leads to a breakout or a breakdown. Don't change that dial. The future of Bitcoin's network itself is on the line with potential forks and censorship wars heating up. Ordinals leader Leonidas threatens Bitcoin core fork over censorship fears. A dramatic showdown is brewing in the Bitcoin ecosystem as Leonidas, a prominent figure in the Ordinals and Runes movement, has issued a stern warning to Bitcoin core developers. In an open letter, Leonidas declared that if Bitcoin core implements tighter default relay policies that hinder Ordinals and Runes transactions, he is prepared to fund a fork of the software. This alternative version, dubbed Dog Army, would strip out most policy rules, aiming to ensure Bitcoin remains fundamentally censorship-resistant. Leonidas argues that the Ordinals and Runes economy has significantly contributed to Bitcoin's security through transaction fees, generating over $500 million. He claims to have secured commitments from miners representing over 50% of the hash rate, who would support consensus-valid transactions regardless of the data they carry. This dispute centers on the principle of base layer neutrality, with critics like Blockstream CEO Adam Back arguing that Bitcoin's primary function is monetary, and that spam has no place, suggesting default policies are crucial. Meanwhile, Advocates for stricter policies, such as Luke Dachter, maintain that filters are not censorship, but necessary for node operators. The upcoming Bitcoin Core V30 release, scheduled for October, includes policy changes that broaden the allowance for data-carrying transactions, such as removing the 80-byte cap on op-return payloads and enabling relaying of transactions with multiple op-return outputs. While proponents see this as aligning policy with miner behavior and improving fee estimation, critics view it as normalizing non-financial uses of block space. Core developers state their goal is to relay transactions with economic demand, and that refusing to do so pushes users to alternative channels, potentially undermining decentralization. Leonidas, however, rejects any content-based filtering, drawing parallels to censorship by nation-states. The debate highlights the decentralized nature of Bitcoin, where users choose their software. Data shows a significant rise in the adoption of the NOT's implementation, suggesting growing community support for stricter relay policies. At press time, BTC was trading around $112,009. But is the network's future the only thing causing Bitcoin's price to stall? We're diving deep into the supply and demand shifts that might be holding BTC back. Paper Bitcoin or profit-taking, the mystery behind BTC's stagnant price. Despite a significant influx of institutional capital, with ETFs and treasury companies accumulating an estimated 200,000 BTC, Bitcoin's price has strangely stalled, baffling many investors. This sideways action, after briefly touching highs above $120,000, has led to speculation about paper Bitcoin versus natural supply and demand dynamics. The key to understanding this stagnation lies in the actions of long-term Bitcoin holders. Since July, on-chain data reveals that over 450,000 BTC have moved from wallets held for 4 to 10 years into the hands of short-term participants. These long-term holders, who accumulated Bitcoin at much lower prices, are now realizing substantial profits, effectively neutralizing the bullish impact of new institutional inflows. This pattern of long-term holders selling into rising prices is a historical norm, often preceding market cooling periods. Adding to the price pressure is the surge in derivatives activity. Open interest in Bitcoin futures and options has climbed by approximately 50,000 BTC across exchanges since July. While not direct spot buying, this indicates a significant amount of capital is being allocated to leveraged bets rather than direct accumulation of the underlying asset. The expansion of CME's futures and options markets further amplifies the influence of derivatives on short-term price movements, tying up liquidity in contracts rather than driving spot demand for BTC. While the evidence doesn't strongly point to manipulation by paper Bitcoin claims, the current situation is a clear demonstration of supply and demand economics at play. The imbalance between ongoing accumulation and accelerated distribution from long-term holders suggests continued choppy consolidation in the short term. However, analysts note this doesn't necessarily signal a market top, and a negative funding rate could still trigger a short squeeze leading to another upward leg. For now, the market is experiencing the push and pull of established holders, taking profits against new institutional demand. And speaking of explosive moves, one meme coin is absolutely crushing it this week, even leaving Bitcoin in the dust. PEPE surges 10% in a week, outperforming Bitcoin amidst meme coin mania. The popular meme-inspired cryptocurrency, PEPE, has experienced a remarkable surge, rallying over 10% in the past week and significantly outperforming Bitcoin and other major tokens. This impressive gain comes as the broader memecoin sector experiences renewed interest, with the Bitcoin Bulletin memecoin index climbing more than 11% over the same period. PEPE's price action saw it jump from 0.00001013 to 0.00001074, encountering short-term resistance near 0.00001082. Notably, trading volume spiked dramatically during the rally, with over 5.89 trillion PEPE tokens changing hands in a single day, more than double the typical 24-hour average. Technical analysis indicates a consistent pattern of higher lows, suggesting strong accumulation by engaged investors who are stepping in at increasingly elevated price levels. The token briefly touched 0.00001081 during its peak, establishing a new resistance line, while a firm support level has solidified around 0.00001017. These levels, repeatedly tested, are crucial for traders anticipating future price movements. The rally was characterized by robust liquidity and sustained demand, with activity surging around retests of the 0.00001069 mark, reinforcing its strength. The market sentiment towards meme coins is clearly improving, with PEPE leading the charge. This surge highlights the speculative yet potentially rewarding nature of the meme token market, demonstrating its ability to generate significant returns and capture investor attention, even when larger cryptocurrencies are consolidating. That's all the news for today, but we've got a lightning round recap coming up right after this. And that's a wrap on today's Bitcoin Bulletin. We saw Bitcoin struggling near $113,000, a potential fork threat from Leonidas over Ordinals, long-term holders cashing out impacting BTC's price, and PEPE absolutely exploding with a 10% weekly gain. Don't miss out on the next big moves. Make sure you're subscribed, hit that notification bell, smash that like button, and follow us on all social platforms for more crypto insights. See you next time.